So there's a potential war.
Okay.
So this is where probably if you're doing stocks, defense stocks here, it's an opportunity.
Do defense stocks ever go bad? Because those guys are always on the market. Hey guys, welcome to yet another episode of Bullish Banter. I know personally it has been a while since I've been here. So today we are coming back to Kenya. And this time around I have another guest from Kenya, Robert. And maybe first of all, how are you doing today, Robert?
I'm awesome, man.
Rufas, I'm good. I'm awesome. Good. I feel like I have a lot to say, but I'll take it slow. And Rufas, I know you have been holding down the fort. How is everything?
Everything is at 99.5K, almost 100K. Bitcoin.
Yeah, for those who are not familiar, Bitcoin is almost back at 100K. Perhaps by the time this is going out, it will either be above 100K or way below 100K. Given how the year has been. Robert is part of the education team at FXPesa and our markets analyst. And he will be joining us once in a while, hopefully to share some insights. And I think the way this market is going and how Trump is, taking the show or giving us a show, different insights and experiences is very important. Maybe just as our heads go, how is this year? How are you looking at the market this year?
Awesome. So, Robert Mbogo, markets educator, FXPesa. Thank you. I think this being Trump 2.0,
yes.
It's an interesting one. Mm-hmm. My first encounter with Trump was in 2016.
Yes.
Me and this guy have been all-timers in the business.
Yes.
And it was a shocker. No one expected this guy to win. It was more of Hillary.
Yes.
But then the markets that time, it was more of, a tweet and the markets ran haywire.
Yes.
So now this time around, he's coming in to drain the swamp, like he had said.
Mm-hmm.
And so he's coming with his own agenda, of course, like one, to bring back manufacturing into the US.
Yes.
But the question has always been, do the US citizens have the right skills to undertake the manufacturing jobs as compared to the competitor China?
Yes.
So the whole thing is something that is quite interesting. Of course, it's come with its own fair share of uncertainty.
Yes.
But as traders, we love uncertainty, especially if you know how to put your money in such scenarios.
Okay.
You go for the risk assets. So I think it's a good one so far.
Yeah.
So far.
I know we have had this conversation before outside the pod. I'll not put you on the spot. But are you finding yourself specializing, either in risk management or an asset class?
Yeah, most definitely. I think for me, I've been a guy who specializes.
Okay.
Diversification is not something that I look at.
Mm-hmm.
I used to. When I was starting out, I was all over.
Okay.
CHF, JPY, everywhere.
Okay.
But I got to a place where I identified a certain asset, which was GBPUSD.
Yes.
And I stuck to it.
Okay.
So I would call even trades and they would go to the PIP. So I think on my end, specialization has worked.
Okay.
And that's because I've understood the characteristics of this pair.
Okay.
Like I know it behaves this way, it behaves this way. This is the time to sit on my hands. This is the time to go all in. This is the time to scale down on my lot size. So I think for me, specialization has worked.
Okay.
Yeah.
Rufas, I know you still deal with a lot of clients, be it in analysis or even training per se, even both of you. Are you finding yourself maybe changing your approach to how you guide them, mentor them, or it's still the same?
Well, I would say it's a changing market.
Mm-hmm.
Things are not the same as, if you started trading, let's say, in the 2010s, 2015s,
yes,
things used to be like very structured.
Yeah.
You could grab a nice trend on, let's say, pound yen or in New Zealand and then ride it for weeks.
Yes.
So today, the markets are more responsive. And the dynamics are changing every time. Some time back, we were talking about whether President Trump would win, whether it's Biden. They changed to Kamala. Now, the president won, but markets didn't stabilize. Okay. We shifted to tariffs.
Yes.
Now we have a war between India and Pakistan. Yeah. So things are changing a lot.
Yes.
So if you look at correlations used to really work. Every now and then you'd know if there's good news for the pound, there's good. That was also good news for the dollar. You would see some of those correlations. Good news for oil, good news for Canadian dollar. Today, even silver and gold could be moving in opposite directions.
And it's normal.
Yes, and it's normal. If you look at volatility, Normally, we would say what Euro USD moves 40, 50 pips a day on average, and that would be consistent for a long period of time, save for maybe an NFP day. What we are seeing today, for instance, gold moving 500 pips in a day.
900.
Yeah, it's becoming like a normal thing. Like gold has moved 1,000 pips, and people are like, "Yeah, this is normal."
This is not.
Those are scenarios you would get 2 or 3 times a year.
Yeah.
But now they're happening almost every day. So of course we have to keep changing tactic.
Okay.
Yeah.
I think I joined in the height of Brexit, if you remember. And that was the time when I think I left GBP USD. And then given what is happening now, I am finding FX very interesting. But my question would be, as a beginner, like you feel like, I mean, volatility is there. So as a trader, on your mind, that's an opportunity. Are you finding it difficult for a beginner to navigate this market, especially given, like you said, India, Pakistan just started the other day. The tariff war is almost today, it's on, tomorrow it's off. You are never really sure what is going to be in place. And even yesterday, Powell confirmed, basically, in terms of our policy, we will just have to wait and see. As a beginner, what would you be, maybe before we got into what is happening in the market, what would be your advice to them in the way that, one, yes, it's a good market to trade, but no, some caution and understanding what works best for you is important.
Awesome. So education is key. Number one. This get-rich-quick thing where influencers are just coming in and showing you the end result is not something that is going to work this time around. You must put in the work, skills, knowledge, and that will take time, right? So traders who are coming in, they need to understand that this is a career where, apart from education, there are so many other things that will come in, the emotional side of it, right? You'll feel at some point in time, fear is coming in, greed is coming in, just want to, someone told you, with 0.01 lot size, you can't buy a car. So let's go 1 lot size. Yeah.
No risk, no land.
Nowadays, I'm hearing more of GLE, and I'm like, okay. So this is not the market to do that, because that uncertainty will just wipe you out in an instant.
I think the uncertainty you're referring to is like, you might be right in terms of the setup, but an announcement or something outside,
geopolitics,
outside your control comes in, and it can work in your favor or severely work against you. I guess for me, I always say preservation is better than capitulation. So if you can, get something small, but on the downside, it's unacceptable risk, I think it allows you to capture the next opportunity. Now, right now as we speak, I think yesterday Powell already did what he did. Today, Bank of England cut, and for the first time, I think they're unanimous in their cuts.
No, they were not.
Okay.
There was a lot of division.
There was a vote,
in fact, out of the 9 MPC members, 2 voted for a 50 basis point cut.
Oh, okay.
2 voted to hold. It's only 5 that voted for the 25 BPS cut.
Yes.
Yeah.
Do you find such inconsistencies or divisions to be relevant? Because if you look at what GBP USD did, and I think in that particular time, it is as we speak, this would be on 8th of May. There is an announcement at 5 p.m. East African time on a potential deal between the UK. Do you feel like, because last year we would take BUE's statement and it could give you at least 3 weeks guidance on what is happening? Are you taking that by the day, or now you're like, okay, this, I know it will be good for today, but tomorrow it's still news?
That exactly, point number 2.
I think they were listening to Powell yesterday and copying notes. I'm more like, so wait and see. That's the message. Okay, tomorrow you do the same.
Okay. I know Trump is like, I might sound biased because I know he will cause uncertainty to me, and I think the other option would not really change a lot, but she would have offered some degree of stability or predictability. Are we in a situation where by now, yes, you will follow the hard data, CPI, FOMC, or even manufacturing data, but at the end of the day, like you said, Trump tweets were very heavy. Right now, it's more like for those who normally use financial juice, you just see those commentary when he's giving sentiments to journalists. Do you try to accumulate that, or you try to block that noise away?
Right now, the uncertainty in the market is something that, if I were to be honest, if you're not using risk management, you'll be wiped out easily. What could be working yesterday may fail to work today. And so if you're a beginner or even an advanced trader, you just want to make sure that you have your trading plan, right? You've projected your plan, like, I anticipate this trade to get here and I'll sell. If it gets there, make sure that you're going with confirmations. Don't just go using pending orders blindly. Just look for confirmations. Once they line up with your plan, trade the plan. That's all I can say. Like, plan your trades and trade the plan.
I'll be pragmatic a bit here, just so that we can glamorize a bit the doom of uncertainty. I think on the last almost 1 week or so, the stock market has rallied consistently for almost 10 days. And if you look at such a thing, it doesn't show uncertainty if you look at it from iBud's view. But if you go on a day by day or a minute by minute or hour by, not even day by day, hour by hour, you are looking at a lot of wicks and gaps in between. How are you approaching such market structure?
I don't do stocks.
Right?
That's
maybe Rufas can answer.
That's an asset that's not my stronghold. I want where I'm making money. So stocks, I find them something that I wouldn't want to indulge into. Maybe Rufas can take on that one.
S&P 500, US 30, UT 100.
The indices.
After we saw the crash, I believe we were in crash territory. For all the top 3 indices, Nasdaq, Dow Jones, SP 500. They had all gone like past 20%. Then there's the April 2 Liberation Day. From that day, we saw a big crash. It was around 19% for SP 500, 19% for Nasdaq, and much smaller for the Dow Jones. So since that crash, it was just an announcement of tariffs on every other country in the world, with China taking the biggest hit. So a few days later, you remember when we had Trump suspending the tariffs for 90 days. So people are like, so you suspend these tariffs for 90 days to allow room for negotiations, and you're working each day. So there's a good chance by the time we finish the 90 days, there will be a substantial number of deals agreed upon. So people started realizing, whoa, I've been waiting for an entry in Tesla, down 50%. What's stopping you from getting into that stock? So there was out of companies that had a huge discount, 30, 20, 50%, even more. So that was pretty interesting, because so far I've survived a couple of crashes, including the COVID. And the game is always the same.
Who is the common denominator?
So that was like a premium opportunity. The only vote of no confidence was this guy, your retiring guy, Warren Buffett.
Over the weekend, I think Buffett retired from being the CEO of Berkshire. They normally say that event is for anyone who can read their balance sheet. So it was a good event, but the incoming CEO has been with them for at least a couple of years. So with that almost $400 billion in cash, it will be interesting to see how they allocate it, given the way I'd say most investors have been looking at them, and I would say most pension funds, or even if we have been following some of the commentaries from those sovereign fund managers, they have been on, we will not change our investment allocation, but we will just not deploy or move out. We will do like Paul said, sit and wait, because they believe the companies are still good, and they know that the inconsistency, especially after the bond market yields went up, they would not want to just be reactive like retail traders. But my question would be, do you feel like now, given institutions are not allocating capital, is it that now individual traders are looking like, yes, this was a cheap price, maybe I will get, because for me, of course, NVIDIA was at around 98. That was a discount, not an investment advice, but it is something to look out for, right?
I think the days are gone when institutions used to lead and control everything in the market.
Interesting.
A lot of things changed since the GameStop saga. So right now, if it's a good stock and the price is down and everyone can do the same models, right now we have AI. People are even using AI to like do stock models, valuations. So right now, if you see a good company like Tesla going down 50%, and your model says it's a good entry point, it doesn't matter whether you are retail, whether you are a hedge fund or a big bank.
Yes.
So all I was trying to say is that the stock market has recovered like 50% of the sell-off that we had in the last 2 months. But then we still don't have that vote of full confidence from Warren Buffett. If Warren Buffett started buying stocks within the last couple of weeks, I believe the stock market would be back to 100%.
Okay.
Yeah.
You don't think the guys who supported him, like Akina Bill Alkman, they have been quite vocal. In fact, I think there was a tweet he made, a long thread ranting that retail investors are like making comments about the economy based on 1 or 2 day stock market action. So if it falls 10%, that is gambling because they are hedge funds and they have like trillions of dollars to manage. While you have your $10,000, you just want to make 1,000 and you're good.
Well, the thing is, even for them, they have run away from that traditional investing system.
Okay.
You find that guys like Cathy Wood
Yes.
from Mark Invest is also buying dips and enjoying, if a stock is up 20-30%, he rotates into another one.
Okay.
So it's no longer just retail strategy. They're also borrowing some strategies from retail.
Okay. While on stocks, I think given the tariffs, we have seen reports of, next month, especially being the third month of the 90 days, that even if containers from China are basically coming in empty. Trump saying, you don't need $30, you just need 2 or 3 and you're good. I know this might sound far-fetched or far away, but from a trader's point of view, do you feel like this is something to be concerned about? Because if supply chain, because what we saw in COVID time, even in Kenya, we have seen issues with prices going up because things are not available. Do you feel like this is something to concern the stock market? And I think for you can answer in regards to the dollar. In that now people are not trading in dollars, so there will not be dollars going out of US to pay for this, and they may not be so much because I'm not buying from you, and you are not buying from me. We might as well buy from other people, and those ones have different currencies. Do you feel like that will affect maybe long-term view of revenue earnings and the dollar strengths, at least for the next one quarter or 2 quarters?
Well, the way I see it, it's been a tough deadlock for a lot of companies.
Yes.
I remember on the night before we got to April 2, Apple had to send planes directly from China carrying iPhones, right? So that's one of the strongest companies around the world. Now imagine smaller companies that source products or materials from China, and then they maybe do improvements and then sell products in the US. So all those companies are facing a lot of challenges. They don't know how to account for the tariffs. They don't know how to reprice their products. Some of their clients are already going directly to China to source products for themselves rather than depending on these companies that were in between. So far, the deadlock is threatening to have empty shelves in the USA. And at the same time, it's threatening full inventories in China. So it's not good for either side. Now that we have a slight chance that there could be negotiations over the weekend between China and US, that is bringing in hope. And hope is very dangerous for investing. Because
for trading.
Yes. So from an investment perspective, since markets are forward-looking, we are seeing a lot of recovery. If you look at European stocks, they have recovered like 80% of the losses they had made from the beginning of the year. So we are looking at, let's say, the Spanish IBEX is almost, it hit a new all-time high yesterday. So even Germany, you look at their stock market index, they're all recovering. Mainly because investors are looking forward to a potential deal. So from an investment perspective, if you can hold a position for a longer period, I think the stock market has been really good over the last 2 weeks. But then for trading purposes, there is a lot of volatility because markets are not just reacting to price action, they're also reacting to tweets, posts on Truth Social. Today, the Chinese president is in Russia. If they announce something, the markets could react, oil could react. We have the weekly reports on oil. So right now, I believe it's more about tweaking your strategy to take advantage of the short-term movements without holding a position for too long.
Okay. Interesting. What's your view on the dollar? Given all this uncertainty, I know dollar has been hovering around 99, and I think for a month now we can solidly say going back to 107 might not really be in the cards.
horizon. Okay.
Yeah.
So if you look at the dollar, it has a gap at 90, is it 98, 99?
Yes.
Right? So I still expect the dollar index to tank before taking on a bullish trajectory. And that is where maybe there's the timing aspect
Okay.
between this meeting in Switzerland, right?
Yes.
Yeah.
And maybe that's when we could see now the strengthening of the dollar. But looking at what's happening in the US in terms of manufacturers, the supply chains, we've seen them seeking alternatives. Mexico, India, Indonesia,
yeah.
they're trying to seek these alternatives. So we've seen some videos even on TikTok where like some ports are empty, right? It's something that no one had ever foreseen such a scenario playing out. So it's interesting moving forward. But as a trader, once again, I would echo what Rufas has said. I don't think this is the market to hold. This is the market to go in, go out.
Well, okay, I'm still
in terms of currencies.
I'm still holding Bitcoin.
Yeah, BTC is totally different. So I think if you're a beginner, especially, let me address this to a beginner, for now until we sort out this uncertainty, then I think it's only fair that you go in, go out until the tariffs are stable, and then we can now have price action playing out rather than all these geopolitics.
Yeah. I think I agree with you in terms of the dollar weakening. Personally, I foresee even going lower.
Yeah.
I think the European currencies are benefiting because people are looking for alternatives. Europe is a bit stable, not well, but stable in terms of policy. So people are just trying to, you don't have any problems so far, and you are not issuing statements every day. I might hold for a bit with you guys, just for a bit. And then we see how this side we sort it out. And I think that's what that rotation is happening. Now, how long it will stay will be dependent on, I think, on the 8th. By the time this is going out, I think we might have already seen either 10 deals or one deal that's signed today and then tomorrow it was torn apart.
Well, I think Warren Buffett called it last week.
Yeah.
He said right now it doesn't make sense to hold on to the dollar. It makes more sense to hold on to other currencies. Yeah, and looking at the currencies, the pound, the Swiss franc, the euro, they have a much better outlook. They might not be performing well today, but the outlook in the near future is more rosy compared to the dollar. Even
if you look at, funnily enough, if you look at the PMI data from Europe for the last 2 days, they are really strong. I mean, they're stable. They are not above 50 or below 47, but they are better every month on month. I don't know if you're looking this as a good sign, or at least in terms of specialization. So if anyone is looking to specialize, do you look at this hard data as a way in which maybe, yes, you might not hold for long, but at least you can find something that gives you opportunity on a day by day? Yeah,
most definitely. So if you look at now that the BOE has cleared everything, right?
Yeah.
So I'm looking at opportunities on, let's say, like the pound.
Yeah.
We could see a bit of tanking, but overall, I foresee a bullish scenario coming in as we go into maybe next month. And then, of course, it will be the whole dollar thing is what we need to clear out, right?
Yeah.
Once that is done, we should have a clear projection.
I think we missed something from Warren Buffett. While he was saying that it's more considerable to look at holding on to other currencies, I think he was alluding to a much bigger threat happening to the US economy. Q1, we had a negative 0.3 GDP, right?
GDP,
inflation is still persistently high, right?
Yes.
Interest rates are still high, and yesterday the Fed held steady at 4.5%. So when you combine those three things, we are basically talking about stagflation. So there's a good chance that the US economy might be in stagflation for a while. And the only way out is, of course, the printer.
They normally say recession is normally confirmed 6 months after it has ended. So we might already be in recession. Because I think, if you remember, was it 2022? We had almost 2 quarters with the negative. But all of a sudden, PMI was up, dollar was strong, gold was down. So I think for those who fancy economics and statistics, it's a very interesting period in history. I think we are in a historical moment. And of course, it has a lot of life lessons, either from an investing perspective or trading perspective, or even politics in general, given how one person can hold the fate of the entire global financial systems,
Yeah.
Now, to other matters, we have seen the geopolitics between, of course, Middle East, India, Pakistan, and potentially others emerging, given how alliances are shifting. Are you putting significant premiums on this, or you are letting it play out and then you can see, okay, which assets will this affect? And then from there, you can be able to now point out. Because for Ukraine, Russia, it was very obvious. Wheat would go up, oil would go up, and that's the time we got $130 a barrel. Right now, we have like two emerging conflicts. Is it, red herrings on your laptop, or it's still amber?
Not yet. Considering, if you look at India and Pakistan, it's not so much into it. If I look at it from that angle. However, knowing geopolitics, they're about to bring in players.
Yes.
They are about to take sides. We've seen what happened on Russia, Ukraine, where everyone took their sides. Like you've said, Chinese president is currently in Russia. So the military industry complex, MIC, I believe these guys are about to look for a new area.
Okay.
So there's a potential war.
Okay.
So this is where probably if you're doing defense stocks here, it's an opportunity.
Do defense stocks ever go bad? Because those guys are always on the market.
Yeah.
What they sell is like water and oxygen.
Yeah.
Well, I think it's a moral hazard.
I know, right?
It wasn't supposed to be like people turning up to a job where your job is manufacturing weapons every day,
That kill people.
and you produce every day.
Yeah.
At some point, you need to get paid. Investors will need to get paid. And those weapons gonna move. I think it's a big moral hazard.
Oppenheimer and Einstein dilemma. You are a genius, but the ingenuity you are doing is to how best can you decimate a large population?
Yeah.
The ethical angle to it. So
Yeah.
I think opportunities will be there,
Yeah.
especially on stocks. And then also maybe if you look at the safe haven assets, the franc, the yen, you could see a potential move to those, in line with what Warren has said. Diversify. And I think the Republicans this time around, not unless Trump has a big picture to it, but clearly we can see he's the one who's backed this meeting, Switzerland. So clearly he didn't have all the cards.
Yeah.
Well,
I think the cards are slipping away
Yeah.
with each indecisive announcement. Yeah. Like you can speak and then let everything fall into line and see what happened. But if you are always trying, when the chips fall in line and you're like, I don't like this outcome, let's reshuffle it again.
Yeah.
It and allies, I think if you have listened to a lot of commentaries from different prime ministers, somebody was joking, if you find yourself, you have done something such that Japan, Korea, China, Vietnam are aligning and giving one statement, you might have missed a lesson in international politics. You look at a country like UK, Germany going, it's a very, you are not very sure if whatever US says, even you remember last time we were talking about NATO, and right now NATO is like together but excluding US, and they are actually upping up their investment in defense and even planning how to support each other. It's a very interesting situation.
Well, the question is, right now the US is heavily involved in Ukraine.
Yes.
They've been funding Ukraine. It has become a political issue that maybe even cost Biden a Kamala presidency. Now you look at what has been happening between Israel, Hamas, and other neighboring nations. There has been a lot of expenditure to those countries, and a lot of Americans were complaining that their tax dollars are not serving them. So Trump won the presidency. He cancelled USAID. He implemented the Doge to cut government spending. So
they tried to implement.
So the question is, does the US have the enough financial muscle to support either India or Pakistan?
I don't think so.
And if they don't have the cash, can India by itself sustain a prolonged war against Pakistan?
Considering that proxies will join, well, of course, I expect someone like Russia will probably support Pakistan.
I mean, I don't want to take sides here because
Russia and China seem to be speaking the same language moving forward.
Well, this might be the shortest war.
This is BRICS, man. But you see, India and China have always had that tug of war.
Well, India is a consumer,
Yeah.
a big consumer of oil. So on a trading perspective, I would be very interested to see how this develops, because if the war destabilizes India, it will take a big hit on oil demand.
That was actually the point I was actually coming to, because given the recent sort of isolation of China due to the tariffs, and India was willing to cut down a lot and concede a lot to the US, they basically presented themselves as the alternative for global manufacturing. While the Vietnams basically were like, okay, we will go the China way and try this. Oil is already down. Do you think we can go back to the 30s? Because the way things are going, and if less imports to the US, means even manufacturing or value addition to some of the, let's say, raw materials from China might not amount to a lot of production from the US. Is that a risk that oil again might,
take a further dip?
Take a further dip.
Yeah, that's a possibility.
Well, if we saw $7 in 2020, everything is on the table. I would say from 2020 to 2024, out of OPEC being so generous and they cut output just to support prices, and then the US took advantage. With high prices, they ramped up production, and then they stole a big market share from the OPEC. So by the end of 2023, the US was the biggest exporter of oil. And of course, you can also factor in the Nord Stream bombing. So right now, I think the OPEC is on a mission to recapture some of the market share it lost. And so far, what we are seeing, they have already planned to expand by 11,000 barrels by June. So if they keep on expanding production, there's a good chance that the US shell will not be able to produce at a profit. And in that case, they will have recaptured the market.
Wow. A lot is happening in the world, right?
Geopolitics.
I know some of these things can be very interesting intellectually, very tiresome to consume and synthesize and factor in what actually matters. Maybe from your individual perspective, as we wrap it up, what are those things maybe you consider important that maybe it's social media channel that updates you on what is happening, and therefore from it, you can even sieve out the noise and have something to work with, Because I believe we have seen sometimes even Trump will tweet, but do not amount to much, even though it's a policy directive. How are you finding information that is relevant and then, trying to apply it?
Yeah, so ideally, the good thing is, as the FXPesa team, we have the market snapshot where we're able to update clients on what's the best area to look for news, right? We're looking for stocks, the earnings that are coming up. We do that projection. And for the beginners who are struggling also, I think we have a whole FXPesa Academy library where you can just go look for all this content, right? And of course, we also have the mentorship classes every day from 11 to 12 p.m., Monday to Thursday, let me be specific. And then the beginners class from Monday to Thursday, 8 to 9 p.m. So we get to cover all that because right now we don't have like a clear-cut like place where you'll seek information, right? So if you look at Market Snapshot, you're looking at, if you're looking at Forex Factory remains a constant, right? Yeah. But then again, you have trading economics. There are guys who will want to go to my FX book. There are guys who will want to go to investing.com. So for us, we're able to sieve all that data and give you something by 11 a.m., something that is quite useful for you.
Let me twist it a bit. Yeah. Do you find yourself leaning a lot on fundamentals, or you are having a good balance between the two?
I'm a techie.
So you listen.
I've always had a conflict with Rufas at some point. But fundamentals will always play ball. You can never ignore fundamentals. A good trader is one who takes fundamentals and technicals. But then as a techie, you need to just map out your areas, draw your area, support, resistance, whatever you call them. Wait for the markets based on the fundamentals to come to those areas. If they come there, you just follow your trading plan based on your confirmations, right? If it's a high probability setup, take it. It's not, sit on your hands.
It's one of the best skills right now.
Sitting on your hands.
So maybe your point of view.
Well, for me, first I would like to add something from Robert's side. So all our beginner and advanced classes are free of charge. So don't be afraid to attend, to share, and you are most welcome to join. So we have a big announcement on some of our products at FXPesa. You guys spoke to us and we listened. And now you have the lowest spreads in the markets on oil. So if you are a fan of trading WTI or US oil, if you're a fan of trading Brent crude oil, the spread is now 2 cents. So we also did the same on gold. Now you're able to trade gold with a 11 cents spread.
Yeah.
And these are the tightest spreads in the markets. Yeah. So other than that, happy that we are back. I know for our listeners, we took you on a round to Uganda.
South Africa.
Yeah, we took you on a round trip to Tanzania. I hope you enjoyed the sessions. So if you have any feedback for us, make sure to send it. And at the same time, like and subscribe to our channels. And of course, if you enjoyed the podcast so far, feel free to share it with other traders.
Yeah. We'll be doing more international round tours. So I think it also, given what we have just discussed today.
Wait a minute, we missed something.
Yes.
Robert,
What's up?
If one of our listeners wants to contact you, if they want to know how they can join classes, where do they find you and how do they contact you? Okay,
awesome. So if you're interested in our sessions, you can just email me, robert.mbogo@fxpesa.com. I'm not so much active. He's been trying to get me on X, but I need to improve on that. But so far, just reach out to me via my email and I'll definitely get to guide you. Yeah. robert.mbogo@fxpesa.com.
Nice. I think for those who would like to join some of the events that we are planning, this one is on financial literacy. Yes, of course, when you make the bag from the market, you might want to pack it somewhere steady for a while. We have an event with Financial Incorrect on 17th of May at Kise Building, so you can check on their Instagram channels for further information and how you can book yourself a slot there. Good type of guests. I think they have diverse experience in long-term investing, so that should be a good session. Until next time, I hope you have enjoyed your bullish banter. Adios.